Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you. And before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Well, we're here again talking about the trading game. It's part 2 of our webinar series on psychology or self-improvement. We call it the trading game, but it really does apply to the rest of your life forever. Yesterday, can be summarized with the statement that the best we can get in life, and in trading in particular, is probabilities. Life is just a bunch of probabilities. That might be an unfortunate reality that each of us must face on our own, but there are very few certainties in life. I could make some jokes about things in life that are certain, but none of them would be appropriate, and we don't really need to worry about those things. Everything related to the game of trading is based on a probability. As you already know, and as the cliche goes, there are no sure things as a trader. Trading involves substantial risk of loss. Past performance is not necessarily indicative of future results. And even when you say that your trading system at best has a certain probability of success, you then have to realize that that probability of success is not a sure thing. Just because a trading system accomplished a 75% win percentage in the past with an average winner of X and an average loser of Y, there's no guarantee that any of those statistics that you actually have based on a giant sample set of data will ever actually come true or be realized as you trade forward. It's also true of life. No matter what your parents did, or no matter what else has happened in your past, no matter what happened in your last job, no matter what people might predict about you and your ability to trade, the probabilities associated with your ability to trade really are meaningless. The best that you can get in life is probabilities. That's a damaging and unfortunate reality that some people cannot accept. It doesn't make it less true, or it doesn't make it less probably true. I guess that's just probably true. I don't know it for sure. But I suspect with a high degree of confidence that the best that we can get in life is probabilities. And that's unfortunate because trading systems and traders in general need confidence in order to take trades. And most of the time, confidence comes from probabilities. The higher the probability of success, historically, the more likely you are to feel confident about the trading that you're doing. You can feel confident about things that you do in life because you have a historical performance or track record to go off of. You can feel confident because you're following on the coattails of someone else that you greatly admire. You can feel confident because you have a lot of money in the bank. You can feel confident because you have people around you who love you. You can feel confident because you're just faking it. All of those are ways that people feel confident. It's probably true that your degree of confidence is somewhat related to your ability to succeed. It's probably true, and we may talk about that in part 3. But today, we're not going to talk about the C word, confidence. We're going to talk about a different C word that's a little bit more difficult to accept. Remember that the lizard brain, the part of your brain that drives your emotional response to high-pressure situations, that lizard brain gets in the way of goals and performance. Let's say you have a trading system with a high degree or probability of success. You've tested it. You're following someone that you trust. And you've already done your testing yourself. So the system's been tested. You're following an authority that you respect, admire, and trust. And you've done your own verification of that methodology, and you have a probability of success and some confidence related to that success. It's still true that the lizard brain is going to get in the way of performance. The Swiss National Bank will intervene. Something will go wrong with your computer. A family member will need you. Or like me back in May, I went to the emergency room, dehydrated and sick, and left a dollar Swiss trade open. Took me a long time before that trade closed. The lizard brain got in the way of my goals and performance. Life gets in the way. Things happen. I want to talk about that today. The lizard brain gets in the way of goals and performance, and what are you going to do about it? You can't just go down the road of life and say to your broker, oh, my lizard brain got in the way of my performance. I think I would like a do-over on that trade. Today I'm going to talk about one method for getting the lizard brain out of the way and focusing on what you need to get done. We're going to focus on the word deliverable. And inside of this word or concept of deliverable, we'll also focus on consequence. A deliverable is like this box that you see pictured on the screen in front of you. That box contains whatever it is that you desire to achieve. It's a result that you're looking to get. If you're storming the beach in northern France on D-Day, your deliverable is taking the beach and establishing a new front in the war in Europe. That's your deliverable. The deliverable has some characteristics that are very important. A specific result delivered by a certain date with a consequence. Consider for a moment that if they stormed the beach at Normandy and failed, on that certain date, there would be a major consequence. They had a specific result that they were attempting to achieve. It had to be delivered by a certain date, and it had a consequence. Now, every day of World War II could not be storming the beach at Normandy. It required the marshaling of enormous resources and the coordination of massive numbers of troops, equipment, and strategy, all designed to achieve a specific result by a certain date, and there was a major consequence, meaning the war against fascism, that was at stake. If you took out the specific result and they stormed the beach at Normandy, they wouldn't know when they were done. If you took out the certain date, they wouldn't really care when they did it, and it probably wouldn't have gotten done, or they would have kind of lollygagged around. They knew they needed to be at a certain point in time by a certain date. They had actual dates and times that they needed to be in an established position on the beach or even further. And there was a major consequence. They were willing to give up their lives in order to achieve a result because the consequence was a cost of human life even greater than what it would cost to achieve the result. When we talk about achieving results with respect to trading, we have to talk about this dirty word, consequence. Traders in particular, unfortunately, don't like this word consequence. We like to hold our losing trades open and hope that they'll come back. We don't like to have a self-implemented consequence in place. We would prefer to simply trade our way through whatever damaging things that we do. We don't like consequences. Nobody does. Your teenagers don't like consequences. Your children don't like consequences. And as adults, we don't like consequences either. Most traders that I know and have met in the last 10 years, and that includes, like 10,000 traders personally, are trading because they like the sense of freedom. They like to be able to set their own hours, and they don't have to answer to anybody except for the market. But the fact of the matter is they don't really answer to somebody when they don't achieve the result that they have set out to achieve. There is no real consequence in place. I think that missing element is a major factor in why many traders fail, and it's a major part of our discussion today. Once again, today we're talking about a deliverable. Why we're talking about a deliverable? Because if we set a delivery date for a specific result with a consequence, we push the lizard brain out of the way. That lizard brain is what makes you take an impulsive trade. That lizard brain is what makes you run away from a trade that you were supposed to take. The lizard brain controls the fight or flight syndrome or response mechanism in your brain. It comes from years of evolution, or it's what God put into your brain. It doesn't really matter what you believe. Either way, you've got a part of your brain that controls the fight or flight response mechanism. And that mechanism does not help you become a better trader. A deliverable can get in the way or block that response mechanism that takes over your brain in the moments of high pressure. A deliverable, once again, is a specific result delivered by a certain date with a consequence. Consequences in life and in trading are either fake or real. You either mean it or you don't. When I speak about trading and I speak about consequences, I'm not speaking in particular about losing your entire account. I don't think that that is a major consequence. I think most traders expect that at some point along the way they're going to lose money. As you can see in the real world of trading and investment banking, you can take a trader, you can put him inside of an investment bank like UBS, and he can experience a $2.3 billion loss, and he can get away with it over a 3-year period of time. Losing money is not a real consequence. It's actually just the cost of doing business as a trader, but it's not a consequence. Why? Because losing money wasn't enough to keep UBS from continuing as a business, and it wasn't enough to keep Jerome Cavell or other traders who have lost significant amounts of money from trading again. A consequence is either a do-or-die situation. It either allows you to continue as a trader or not continue as a trader. Losing money in the world of investment banking, trading, or trading Forex from the comfort of your own home, losing money is not a real consequence because most people will lose money and then get some more money together and then do it again. That's not a consequence. The consequence I'm talking about is a major consequence that says if you do not deliver the specific result by a certain date, the consequence is that you need to stop trading. Not temporarily, but forever. That's a little bit difficult for people to stomach, especially people who say, I'm still learning. Well, if you're still learning, then your specific result isn't do or die success. Your specific result is to develop a set trading plan based on probabilities and then to implement it. But if you have learned a trading system and you understand what the probabilities of that system are, and you've done reasonably well in the past at certain times, then it's time for you to attach a real consequence to your performance. Consequences are either positive or negative. For example, if you clean your room, I will give you a car. That's a positive consequence. A negative consequence would be something like, if you don't clean your room, then I will take away your car. Most people in life and in trading believe that they are motivated by positive consequences. This comes from a desire that we have to be accepted or loved by people that we either respect or who don't respect us and who we are seeking to impress. Most people believe they're motivated by positive consequences and that they do better when they are spoken to kindly. That's not actually true. Most people, in my experience, are not motivated by positive consequences. Most people are enabled by positive consequences. Most people are coddled and end up relaxing when there are positive consequences. Honey, I know you can do it. Sounds great, and it makes you feel better before you go to bed at night. But it isn't actually a way that you end up accomplishing much at all. Most companies that are high-performance companies have a culture of performance. General Electric under Jack Welch was famous for ranking employees by their ability to deliver results and share the value system of the company as a whole, and then the employees in the bottom 10% were let go. There was a real consequence attached to the inability to deliver specific results by a certain date and share the company's values. If you read the book Jack by Jack Welch, or you read any other book that outlines the system for ranking employees or evaluating employees at General Electric, you'll read some really tough situations where people were let go because they did not perform well. Also, you'll read stories about people who were switched from one division to another because they did better in one division and produced results in one where they could not produce them in the other. But no matter how you slice it, companies and individuals that operate at a high degree of performance and deliver results on time of a specific quality are often motivated by a negative consequence. It's simply the way it is. Now, we could have a disagreement about this, and that would be perfectly fine, because as far as I'm concerned, today we're talking about this from my perspective, and we could certainly have a discussion of it according to your perspective. But we're going to give mine a try first. A deliverable does not care about your family. If you work at General Electric, or you are coaching with a big-time tennis coach, Scott Welsh or somebody else, the result that Scott Welsh or Jack Welch or any other Welch or anybody asks of you doesn't care about your home life. A deliverable in the world of trading foreign exchange doesn't care that your family is missing you, doesn't care that your family wishes you were around more often, doesn't care about balancing your family and your work responsibilities, and doesn't care about how well you are able to service the needs of the loved ones that you have in your life. A deliverable cares about delivering the product. Recently, one of our team members, a fellow pivoteer, had to deliver a very specialized product to a major manufacturing firm. In fact, to Boeing. And the success of this individual's company, or the future ability to do massive amounts of business with Boeing, hinged upon this individual's ability to deliver a product in the trunk of his car to a Boeing representative by a certain date. That deliverable had to meet certain specifications, and if it did not meet those specifications, it would be rejected, the contract would be nullified, and his company would suffer enormous consequences. There was a deliverable, there was a specific date, and there was a consequence. If this individual was managing a team of individuals to deliver this product, and someone came up to him and said, "Hey, I'm having a hard time at home. I don't think I can come in to work until noon every day. I don't think I can be a part of delivering the product," then this individual would simply have to let that person go, but would not be able to coddle or accommodate a lack of performance. Boeing didn't care that 100 people at that company either had a happy home life or didn't have a happy home life. It's a terrible, terrible, terrible reality that having a deliverable does not care about your home life. A deliverable doesn't care about your tea time. It doesn't care about your golf group. It doesn't care about your friendships. It doesn't care about the time that you're supposed to spend with your friends. It doesn't care that 2.5 Men is your favorite show and you're supposed to watch it every Monday night. It doesn't care that your favorite movie is coming out and that you need to spend the time to go see that movie. It doesn't care that you have hobbies, outside skills, enjoyable activities that you're missing. It doesn't care about any of those things. If you owe a product to Boeing by a certain date, then everyone's going to stay up late, stay longer at the office, and contribute to deliver that product by a certain date, or else we're all out of a job. Now that's a real consequence. You can either live according to that philosophy, or you can live according to the philosophy that we'll get around to it when we can, and we're not going to make our family relationships suffer, and we're not going to make our golf tea times or our friendships suffer. We're not going to let that happen. Well, the reality is, if our friend decided that he was not going to be able to deliver the product to Boeing, then he was going to get an enormous amount of additional time to spend with his family, like infinite time, because Boeing was going to nullify the contract and there would be no business to do, so he could spend all of his time with his family. The fact of the matter is, sometimes life gets out of balance as you have to deliver a specific result by a certain date. Once you become skilled at delivering that specific result by a certain date, life has a funny way of continuing to ask more and more of you and become more and more imbalanced until you finally have to retire and get out of the game completely. But I'm not all about teaching you how to achieve balance in your life right now. If I could teach you how to have balance in your life, we'd be having a short seminar about that. Instead, I need to remind you that a deliverable in the world of trading foreign exchange doesn't care about your job. It doesn't care that Hector has to go to a meeting. And Hector has spent huge amounts of hours at night and outside his job hours because he has to be able to do both right now. He can't cut corners at his employer or steal time from his employer, but he can't cut corners or steal time from the development of a trading system. Where's the balance? There is no balance. Hector owes a deliverable by a certain date, and if he doesn't, there's a consequence. In the world of trading, we often avoid the consequence. The consequence is fake. We're trying to develop an automated method of trading a certain system. What happens if we don't do that? Nothing happens. We just don't do it. There's no consequence. And so people forever switch trading systems, develop new trading systems, drop the development of a trading system before it's finished, or, as Bob and I talked about, switch between trading systems because they're tired of trying to make the one that they're working on function properly. You know, every time you go to a big company, if you've ever worked inside of a big company, you find one common denominator. As soon as somebody gets tired of working on a project, they try to push it off to somebody else because they don't want to finish it. And in life, there are very few finishers and a lot of starters. And I want you to be a finisher. But in order to be a finisher, you have to realize that a deliverable doesn't care about your goal to buy a jet. It doesn't care about Keith's goal to buy a helicopter. A deliverable only wants to be achieved. It only wants to reach its destination within a certain amount of time. A deliverable doesn't care that you want a bigger house. A deliverable doesn't care that you need to pay off a certain amount of debt. A deliverable only wants to be delivered. It's all it cares about. Once again, a deliverable is a specific result delivered by a certain date that carries a consequence. We've put some emphasis on the word consequence so far, but I want to put an emphasis now on the word specific. Oftentimes, I will see traders say, I want to become successful as a trader, or my goal is to trade for a living. That specific result that they mention, that seems like it's solid in their mind, doesn't really make sense to an outsider or someone who's listening. I'm asking you today, if you set goals that are unspecific, you won't really know when you get there, and you're simply proving that you don't really want to be held or tied to something concrete. You'd rather have it be more general. It's easier to achieve success in general than it is to achieve a specific result. Also, most people don't want to be held to a certain date. That's true of life, and that's definitely true of trading. I've only heard twice in my whole life a trader say, Rob, if I don't make it as a successful trader and achieve this certain result by December 31st, then I'm going to stop trading. I'm going to give up on it because it's wasting a lot of my time. I've only heard that twice. One guy was named William, and he lived in the Atlanta, Georgia area. He had a specific result, he had a certain financial goal, and he had a date that he had to achieve it. And he says he was going to quit if he didn't achieve it. Most of us that are here today are repulsed or disgusted by that idea. Most people are. Not everybody, but most people are. Rob, I wouldn't, in a million years, Rob, I'm not going to stop trading. Well, I'm asking you today, what specific result then are you going to achieve by a certain date? And if you don't achieve that specific result by a certain date, and you don't really have a consequence, then what you're telling me is this is a hobby. That you're willing to kind of just play this out for social reasons, to meet people, because you enjoy it, because you like to do it. But if you don't have a certain date in mind, then a lot of this is really unspecific, and you're never really going to know that you got there. And if you don't get there, it's not really going to matter, in which case, what are we doing here right now? Why are we spending all this time doing this? Why is Dan juggling the responsibilities that he has at home with the responsibilities that he has to his family, with the responsibility that he has to the bakery, with the responsibilities that he has to his job, with the responsibilities that he has to trading? Why would he be doing that if he didn't want to achieve something specific by a certain date so that he could relax his obligations in another area? Otherwise, why would he continue to juggle all these different things? What would be the point of that? That would be madness, right? He would be doing it maybe for social reasons. He perhaps would be doing it because he enjoys everyone's company here. He would be doing it as an escape from something that is successful but he doesn't really enjoy. All of those reasons could be true. But in particular, I want to focus on the idea that if Dan doesn't have a specific result that is due by a certain date and carries with it a consequence, then Dan's wasting his time. And the last time that I met with Dan, I just wondered aloud why he didn't just go back to what was working when he was doing standard wallaby trades. Why doesn't he just go back to that? He was doing quite well with that. Yesterday, I had lunch with Dave H. And Dave H. and I talked about, hey, Dave, you've really done well at one specific type of trading. Why don't we just do a lot of that? And why don't we set a goal that we're going to do a certain amount of those and achieve a certain result by a certain date? Why don't we just do that? The reason we don't do it is because it frightens us to have a consequence. We get thrilled about specific results. We love talking about how many pips we're going to make. We love even talking about that we're going to make them by a certain date. Actually, most traders don't like talking about that. But you've already become comfortable setting a specific result delivered by a certain date. You're in the minority when you think that. But what we're not really still comfortable with is that the lack of success would carry a consequence. And we avoid that because we don't really know if something is achievable. We wonder about that. For example, goals related to trading, in my opinion, should have a maximum 90-day window of time and include daily effort towards success. We recently created the personal watch list, where you choose a weekly goal and then daily specific measurable activities which take you further to that goal. Those all should somehow relate to a 90-day goal that you have in the market. In other words, a deliverable. What is it that by the end of the year that you want to deliver? What is it? Let me give you an idea. I'm the leader of the Pivoteers. I'm in charge of the group and I brought you all together. You invested time and money into this endeavor. And what if I said to you that a deliverable was 1,000 pips in net profit by all Pivoteers combined, trading established rules, either standard Wallaby, MCC, or maybe Hector pivot bias, by December 31st. Hector could do 100, Keith could do 150, Bob could do 500, Connie could do 200, and all of those combined would be 1,000 pips in net profit by all Pivoteers in trading established rules by December 31st. And a consequence would be that if this isn't achieved, I'm going to disband the Pivoteers. I'm going to cancel. I'm going to shut down the website, delete all the entries, delete all the lessons, delete all the trades, and pack it up and say we weren't able to do it. That would be an interesting consequence, wouldn't it? I mean, people say, well, gosh, that would be terrible because some of us are still learning. Well, right, it's a consequence. It's a terrible consequence. I mean, that would be a terrible thing. That would be awful. 100 pips by December 31st or October 31st, trading standard Wallaby divergence on 2 pairs on 5-minute charts would be another deliverable. That's an example of a deliverable that I might suggest is a reasonable deliverable for Dan P. I'm using Dan as an example because I feel like I know Dan pretty well, and I feel like I can state this one without overstepping my bounds with Dan. So Dan, your deliverable could be 100 pips net profit by October 31st, trading standard Wallaby divergence on 2 pairs from the 5-minute charts. You could add a couple more pairs in there. But if you got to 100 pips on October 15th, what would happen? We would know that you achieved your deliverable. You would put it in the trunk of your car and you would deliver those pips and offer them up on the personal watch list track so that we could get to our 1,000 pips in net profit by all Pivoteers by December 31st. And then, Dan, we would reset a new deliverable. We would extend your contract to manufacture pips for the Pivoteers. We would extend your contract, and we would reward you in some way. Perhaps if you were able to do that twice by the end of the year, the positive reward would be that we stay together as a group and that you and I write a little ebook together, Dan, and that we sell that ebook and you take some money from that ebook and you put it into your trading account. So there's a positive consequence and there's a negative consequence attached to this. But what if Dan were to say, I owe 100 pips in net profit by October 31st, trading standard Wallaby divergence on 2 pairs on 5-minute charts, and these are the consequences that would result from my inability to do that, and the consequences that would result from my ability to do that. Positive and negative consequences. What would your 90-day plan be? What would your 30-day plan be? What would it be? How would you go about setting a deliverable? Should somebody else set it for you? Oftentimes that makes a lot of sense. When our friend from the Pivoteers delivered a product to Boeing, Boeing delivered the specifications to our friend, and then the friend had to produce something that met those specifications. It's perfectly reasonable if somebody else sets the goal for you. I hate using the word goal in the same way that, do you think Alexander the Great said, I'm going to conquer Asia by the end of the year, or, whatever it was? I don't know what you called it back then. Conquer the known world by the end of the year. Alexander the Great, once he set that specific goal, set himself apart for the rest of eternity. There was a result, there was a date, and there was a consequence. If Alexander the Great failed at conquering the known world by the date that he'd had it, there was a major life and death consequence. Didn't Hannibal fight the Romans and take all those elephants up through Italy? Result, date, consequence. The achievement or the delivery of a specific result by a certain date that carries with it a certain consequence. When you set a specific result in mind and a delivery, you have a certain date attached to it, and you have a consequence. You marshal and summon every resource that you have at your disposal. You accept no excuses from people that are dorking around. You never complain, and you focus on delivering stuff. If you knew that by the end of the year, you needed to end the year with 100 pips net profit from now until the end of the year, and if you could not do it, that you would take a mandatory 6-month break from trading. You would summon the resources at your disposal. You would finish up testing a trading method, and you would make sure that you weren't rushing that method. You would make sure that you understood what you wanted to do. You would accept no excuses about your schedule, or it's too late for me, or I can't stay up that late, or oh my gosh, I can't take those trades because they don't work right, or whatever. You would summon the resources necessary to finish the testing that you need to do. You would accept no excuses. You would not complain, and you would focus on a deliverable. If you tell me, Rob, I can't do that by December 31st, then what you're telling me is that you need a different deliverable. Instead, you could say your goal is to do no live trading, but to complete the testing necessary to produce a trading system to implement after December 31st that will produce 100 pips within the first 3 months of next year. And that's your deliverable. And if you cannot deliver that product, a trading system for you to trade that you have tested by December 31st, then you will take a break of 6 months from trading. There are people here that disagree with that. But I'm telling you that if you never set a date for it and you never hold yourself to it, you are not going to achieve it. It's not going to happen. I see traders all the time do two things. They don't set any consequence to failure to achieve a certain profit level, and so they just continually lose money with no consequences. Number two, I see traders all the time say, I can't do that, Rob. I can't stay up that late. I can't do that. It's too difficult for me. I can't trade that methodology. It doesn't work. I need something different. And then I give them something different. They say, no, I need something different. I need something different. I need something different. I need something different. And there's never a consequence to it. They never have a specific date by which they have to make a decision about changing their life so that they can trade. If you do not have a trading system that you feel confident in, that would produce 100 pips by the end of the year, then you need to use the time before the end of the year to create that trading system with no excuses. There's no reason why you cannot, by the end of the year, develop a trading methodology that will make 100 pips. I cannot promise that it will require no sacrifice from you. It will probably require you to stay up late. It will probably require you to do things that are difficult for you to do. It will probably require you to grow up. It will probably require you to make this a priority and other things not so much a priority. I have one central belief about goal setting and accomplishing things in general. You can set goals or you can just do stuff. Oftentimes when we set goals, we think about them in terms of hokey-pokey self-improvement. I'm setting a goal to lose weight. Rah! And then we think about getting excited about that. I like to think about this in a different way. I like to consider that I can either decide to do something or decide not to do something. But once I decide that I'm going to do it, it's not a goal. There's a delivery date and there's a major consequence, and there is no failure. There is no allowance for failure. If you are an individual who right now does not have a trading methodology that you feel will produce profit for you on a regular basis, you have until December 31st to create that method. Period. And there is no failure. There's no, I can't, or I don't know if that's enough time. No, you have until December 31st. Period. If you just continually told your boss at work that you don't know when you're going to finish, and it could be sometime in the next 6 months, but you don't know for sure, you're just going to get fired. You can't live your life that way. You have to have an actual delivery date for something specific. And you can't take forever to develop this stuff. It's actually far simpler if you allow yourself to sacrifice a bit than most people make it. If you do have a trading methodology that does produce profit, Dan is a perfect example of this. You can either set a goal to make 100 pips by the end of the year, or you can just do it. And there is no, absolutely none, allowance for failure. It's just the way it is. And you have to marshal the necessary resources to do it and accomplish it as soon as possible, and then you're done. And you've got it. And you banked it, and you're done. Let's go back to the beginning and remember where we started in all of this. The best that we can hope for in life and in trading are probabilities. A really brutal truth is that even though life and trading can only give you a certain probability of success, we still have to tie a concrete consequence to the failure to implement those probabilities in a successful manner. Perhaps it's unfair. Evolution, the law of the jungle, Darwinism, Calvinism, any of that stuff is unfair. The best that we can hope for is a probability that we're going to make it. But if we don't make it, if we are unsuccessful in the pursuit of what we seek to accomplish, there must be a concrete consequence. And the necessity of tying a concrete consequence to something that only at best has a probability of success seems unfair and unfortunate, but we can't remove the reality from it. Your lizard brain is going to get in the way of goals and performance. And having a deliverable, a specific result delivered by a certain date with a consequence, pushes that instinctual response to pressure out of the way, and it says, no, I need to deliver something specific by a certain date, and none of my personal failings are allowed to get in the way because there is no allowance for it. And that any prevention of you accomplishing the goal is your responsibility. It's not mine, and it's not anyone else's. It's not the market's fault for being active during a time that you're asleep. It's not the market's fault that you have problems with impulsivity. It's not the market's fault that you don't yet know what it is that you want to focus on. It's your fault. Everything dealing with this is your fault. And the job is on your desk, and the deliverable is in your hands. The takeaway from today's presentation is that you should set a goal or a deliverable that you will achieve or deliver by December 31st, 2011. I would encourage you, furthermore, to set a major consequence and tie it to that deliverable. And then I would encourage you to set weekly or monthly goals that push you closer to that deliverable, and then set daily activities in place that push you forward. If I were Dan and my deliverable was 100 pips by October 31st, trading standard wallaby divergence on 2 pairs on the 5-minute charts, I would every day sit down, acknowledge which currency pairs are the ones that I would like to trade, or acknowledge that I've already achieved my goal for the week or whatever, and I need to stop, and that would be my goal for the day. Or I would acknowledge that I need to broaden the base of currency pairs that I look at, or double check with Rob because I'm feeling a little bit weak, or I need to hand my account password to a friend so they can log into that account and take the trade, and I'll just tell them what to do. But whatever personal failings Dan has, and I don't think he has very many, whatever personal failings he has are irrelevant. He would owe 100 pips by October 31st, and that's just the way it is. I encourage you to set a goal, set a deliverable, set a delivery date, a specific result by a certain date, and tie a consequence to it, and let us know what it is.